Hi, I'm Jeff Segelke, president of JRS Wealth Management and Segelke Financial Group, and I am here to give you an update on the economy and the stock market. Boy, a lot has happened. Here we are, it's May 1st, 2025, and it's been a wild ride, honestly, this year. So I know a lot of people have been concerned about the stock market, about the economy, about jobs, about federal government cutting spending, just all sorts of things. There's all sorts of things that have created concern and uncertainty about the future. And so I want to give you a quick update to tell you what's really going on and what you need to know. The news does a really good job of scaring us. They're really good at that. In fact, this came out that the news agencies, they figured out that if they show a house burning, you are more likely to keep watching the news. So they've figured out that if something bad is happening, that gets viewers. And so they always talk about and show bad things. This is why the news tends to, although, we need to stay up to date on what's going on in the world, the news tends to be mostly negative. And so just take that with a grain of salt when you're watching the news. But anyway, what I want to tell you is that yes, there is uncertainty. We've got a new president, President Trump, and he is putting tariffs on all sorts of countries. And a lot of people don't even understand what a tariff is exactly. A tariff is a tax. It's a tax on goods, products coming into a country. So for example, if we, the United States, put a 10% tariff on everything that's coming into the United States, that means something that costs $100 and a different country is bringing it into the United States, they have to pay a 10% or $10 tax. So now that company has to decide, do we just raise prices? So instead of selling it for $100, we're going to sell it for $110 so that we keep our profits, or do they sell it at $100 and only make $90 now? And so that's the issue with tariffs, is that they create uncertainty because they're going to cause potentially prices to go higher on goods. And that can be substantial depending on what you're buying. If you're buying a new car and it's from overseas, that can be substantial. 10% added on to a $30,000, $40,000, $50,000 vehicle or more can mean thousands of dollars more in costs. So that is the issue. That is the fear with what's going on. And so tariffs and the talk of tariffs has created fear. In fact, so much so that in the months, we hit an all-time high in the stock market. I think it was around February 18th. 2025. And since then, there was a point not too long ago, a couple of weeks ago, where the market was down almost 20%. And that's a lot. That's a lot of losses in about a month or two. And now it has actually bounced back a little bit. If you didn't know that, the market has actually come back up. And so now, the S&P 500 as of today is down about 6% year to date. Give or take, depending on what the market's doing today. And so, there is some concern, but at the same time, what I want you to think about is if you look at your investment account from January 1st a year ago to today, most likely you've lost little to nothing. There's a good chance you're even positive from a year ago. So just be aware that even though the news is telling us that it's the end of the world and tariffs are going to destroy everything and the economy's falling apart, the truth is that the stock market is still higher from where it was a year ago. So most people have made money over the last year. So just be aware of that. Take, with a grain of salt what the news is talking about. Now, does that mean we are out of the woods and that there's no problems ahead? Not at all. Tariffs are definitely a scare, and really what it is, it's not tariffs. It's the fact that if other countries put tariffs on us and we put tariffs on them, and then they put more tariffs and we put more tariffs, and it becomes a trade war, that's not good. And some are saying that's kind of where we're at with China. And China, we get a lot of goods from China. So we do need China for cheap goods in the United States. But just know this, China needs us more than we need them. Their economy is based on selling cheap goods. And so if we don't buy their cheap goods, their economy falls apart. So China needs us. That's why my belief is that you will see a deal happen between China and the United States. When? Who knows? Could be weeks from now, days, weeks, or months from now. We have to be patient with this process. That doesn't mean we have to like this process, but we do have to be patient. The president is doing what he feels is best, whether that's right or wrong. We'll see. History will determine that. But what he's trying to do is to make a more level playing field for trade, because China does things that are not fair to us. And even our friends, in Europe, for example, they put tariffs on our automobiles. So we manufacture a car here in the United States and send it over to Europe. They put a penalty tax, a tariff on it to make it more expensive. And now we can't really compete with Mercedes and Audi and BMW and all the other cars made, VW, made in Europe. And so that's a real problem. And so we're basically, what Trump is saying is he wants to do to them what they're doing to us, to make it even. And what he's really trying to do is get them to take down their tariffs or eliminate them so that we can have fair trade. So whether or not what he's doing and how he's doing it is right, I think what he's trying to do does make sense, and hopefully is going to create better trading for the United States with the world, and hopefully lead to robust growth for the entire world. So that's the hope. But right now we do face uncertainty. The economy has slowed down. We did get a report for the first quarter of the year that the economy declined very slightly, 0.3%. So it just means the economy did not grow for the first quarter of the year. We don't like that. We don't want that. Is it the end of the world? No. And so we should not be panicking. I don't recommend selling all your investments and going to cash. At the same time, you do have to look at your time horizon. If you are a long-term investor, and by long-term, I mean you have at least 5 years before you're going to need your retirement funds, it's okay to leave that money invested. If you have less than 5 years, if you're planning to retire 2 years from now, or if you're already retired and you've got money that's in the stock market that you can't afford to lose, that you don't have time, you're taking from that right now, then that money maybe should not be in the stock market. That money should maybe be in other investments, lower risk investments that can create cash flow. So there are different strategies you should be using at different stages in life. But if you have years till retirement, you should not be worried about this. This is a momentary blip. Yes, the stock market, is down maybe 10% from its high, from the high point. But really, that happens all the time. Even in good years for the stock market, there's on average a 14% pullback in the stock market at some point during that year. So it's normal for the stock market to have a 10, 15, 20% pullback or downturn, but then bounce back. And we've seen this again and again. And so I would tell you to just be patient with what's going on right now, but to examine your portfolio and decide, if there's money that you need in the next couple of years, that money should probably not be in the stock market, because we don't know what's going to happen. A downturn, a recession could happen, the stock market could go lower, and so there's always that risk. At the same time, over the long term, we can see very positive things happening in the economy and with companies, profitabilities going up for many companies, and so there's reason for hope. So don't lose hope. Just wanted to give you that quick update on the economy and the stock market. Things are good right now, but they're definitely shaky. They're shaky. And so that's where you just want to be careful. Make sure you have some safe money that you can rely on in bad times when stocks and your risky investments are not doing well. But over time, those risky investments are usually going to perform the best over the long term. So you want to have both. You want to have some safe money assets and some risky assets. And that's how you make it through these turbulent times, these volatile times when the stock market is gyrating up and down. So hopefully this helps. I hope this brings some hope to you. Good times are ahead. When? We don't know. Is it, months from now, years from now? But good times are ahead. And history tends to repeat itself. So we'll see ups and downs always. It's part of investing. Stay the course. And if you have any questions, please reach out to our office. We'd be happy to talk to you about your retirement, your plans, and make sure your investments are in the right place. As an independent fiduciary financial advisory firm with over 26 years of experience doing this, we can help. We can help you figure this out. I've been able to see the markets, the crash of 2000 through 2002. That was the dot-com bubble bursting, the financial crisis of 2008. And more recently, 2022, just a few years ago, the stock market dropped 20 to 30%, depending on how you're invested. So we've seen this again and again, and the market tends to always rebound and go to new highs. So just, make sure you have a plan. If you don't, give our office a call, and we'll help you out with that. Hope you have a wonderful day, and take care.